Hello niece and nephew, this is Uncle Robert. Today we're going to discuss about a company who has a chance to 3x in the next 2 years. This company was previously a cyclical commodity company with boom-bust cycles.
An outlook that is so different from the Micron that I used to trade when it was in the 1990s, my hedge fund, 2000. It's always been boom-bust. Not anymore. I think it's secular growth, and that makes the stock go higher from these levels.
But under new leadership, he has transformed into a secular growth story. With that, this company deserves a re-rating. That means higher PE ratios, as well as continuous profit growth in good and bad times. Let's dig deeper. Please share this video with more friends so they can learn as well. Please remember to like and subscribe. You can see what Jim Cramer meant about the cyclic nature of this company. Profits, losses, profits, losses. And with Moore's law, you can see that memory gets cheaper over time. The key to winning is to have the best technology, which means you can print as many chips on a wafer as possible, lowering your cost. And that allows you to win in good and bad times. Look at this company's recent performance. Even though memory price has been crashing recently, their profits have been growing. The game changer happened when Micron, who was second to fourth in technology, suddenly surpassed everyone else to be the leader.
In wafer manufacturing, scale is critically important. So scale and cost competitiveness is critical key factor here. And just a few weeks ago, we announced our 1-alpha DRAM technology node. This is the most advanced DRAM technology node by any supplier in the world.
Technology and product leadership with our 1-alpha DRAM node and 176-layer NAND. These are both, for the first time in the history of the company, both of these we are first in the industry simultaneously.
So with the upcoming tailwinds of supply shortage leading to increased prices, we can see profitability going through the roof.
I am talking about the booming semiconductor business. Right now, we've got a huge chip shortage, meaning the chip makers have incredible pricing power. Case in point, last night we got some fantastic results from Micron, the commodity chip maker that's really not much of a commodity chip maker anymore. DRAMs, flash memory, amazing volumes. Now, everyone knew this would be a good quarter. I mean, Micron pre-announced strong numbers at the beginning of March. But the full rundown beat even these elevated expectations. Even better, management gave you a terrific forecast for the next quarter. Commentary was incredibly bullish. Micron's seeing strength across the virtually every single market.
We are very excited, Jim, about the strength in multiple end markets, from cloud, data center, enterprise data center, to the intelligent edge, PCs, smartphones, automotives. All of these are driving strong growth in demand for our products.
Finviz shows that the forward PE of this company is as low as 8.89. The expected EPS growth for the next year is almost 100%, and over the next 5 years, compounding 37%. This is amazing. So you can see Micron today is at 33 PE. Comparing with the leading foundry, TSMC, PE is around the same, 34. Nothing compares to Nvidia, who is by far the leader in innovation for AI and many other chips. Nvidia commands 83 PE. AMD, who is high up there but is not the market leader right now, is holding a strong PE of 40. Take a look at Western Digital. This is head-to-head competitor with Micron. How can Western Digital hold a PE of 129? Looking at Micron's upcoming earnings forecast, we can comfortably see the price quadrupling in the next 2 years. So Uncle Robert's conservative estimates is at 3 times, which puts Micron close to $300.
So we see secular tailwinds in 2022 as well from the point of view of demand.
And Micron, through the 2016 through 2020 timeframe, actually has driven revenue growth of 70%. We have driven EBITDA margins of 50%, gross margins of 40% on an average through the cycle, and return on investment of 20%. So I think you can see that this new Micron is very different, driving for technology and product leadership and financial strength, and of course, disciplined growth. So we are not just about cycle, it really is. We are a growth story here. We have been a manufacturers with a fab in Manassas, Virginia, our headquarters out of Boise, Idaho, and the world's best memory R&D center driven out of Boise, Idaho, and having a global footprint of manufacturing in Taiwan, in Singapore, in Japan, Malaysia, China. So we are very well diversified, which today we consider as a competitive advantage.
Potential risk in future includes overexpansion of capacity, leading to oversupply and softening of prices.
Once the shortage is over, will there be an oversupply?
Last week in our earnings call, we noted that we have seen early signs of stabilizing of pricing in the NAND industry. We do watch and monitor that optimistically, but we do think that in order to really restore the health of the NAND industry, some prudent CapEx management is necessary so that the supply bit growth doesn't outrun the demand growth in the NAND industry. And this is where Micron certainly is being extremely disciplined in terms of how we manage our CapEx investments in DRAM as well as NAND, absolutely focusing on driving our supply bit growth, keeping in mind long-term demand expectations as well.
With Micron's technology leadership, I believe the competitors would suffer even more, and over time it would correct itself, leaving Micron as the eventual bigger winner. Upcoming potential surprise catalysts would be the exponential boom in AI, from self-driving, the explosion in cryptocurrencies. With all this said, I am very bullish on Micron. As long as we see Micron extends its technology leadership, this thing's got wings.
Disclaimer, this is not investment advice, this is just Uncle Robert's own opinion. Please make your own assessment before investing. If you find this useful, please consider sharing with more friends. As always, remember to like and subscribe for more videos like this. Thank you so much for watching. Bye bye!